Welcome to the Paper Assets course. I'd like to start off by congratulating you for your decision to enroll in this course. What you're about to embark on is a quest for knowledge, and for that, I sincerely applaud you. One of my favorite people is Benjamin Franklin, and in his duly acquired wisdom, he made a very profound statement that I've always carried with me. He said, "An investment in knowledge always pays the best interest." Now, framed inside of this equation, the Paper Assets course is designed in such a fashion that the knowledge you acquire can potentially pay untold dividends. In the course of this training, you're going to master extremely powerful concepts. You're going to learn essential trading strategies, and you're also going to develop the skills you need to succeed. The Paper Assets training is going to help you tap into your inner stock market guru. You're about to learn how to identify opportunities and properly understand manage risk, all while learning to capitalize on the potential rewards that are out there. Our goal is to help you build a rock-solid foundation on which you can customize and build your own individualized trading and investment plans. Now, keep in mind, there's really no one magical way to trade or invest, but when you're armed with knowledge and you learn to trade with discipline, the sky is truly the limit. This learning process should be an interactive one. Take notes, feel free to pause the screen to help keep pace, and by all means, repeat sections, not just for comprehension, but to strive for mastery in each concept along the way. The Paper Asset Interactive Learning course is a powerful way for you to leverage your time and to help you exercise and strengthen your financial intellect. My name is Marcus DeVry, and I'll be guiding you through your journey to become a veteran trader. We've got a ton of powerful information to share with you, developed through decades of collective experience. The Paper Asset Training's primary focus is to give you the tools necessary not just to survive in the market, but to thrive in the market. Let's start off by examining what might be considered a typical experience to a new trader or investor. One that you might have heard being discussed around the office. Maybe you've participated in such conversations yourself, or simply overheard them being discussed around the water cooler. You know what I'm talking about, next to the break room where everybody gathers to shoot the breeze. In this particular example, this is actually loosely based on my own initial experience in trading and investing, combined with the collective experience that I've gained from speaking to a lot of my individual students one-on-one and in classroom settings and so forth. What typically happens to a new investor in the stock market, somebody who enters the market without a plan, without an understanding or knowledge of what they're actually doing, they start off with an intent to trade. You want to get in there. You want to participate. You want to do more with your money. You want to plan better for retirement. Get your money working for you. Outpace that interest-bearing account rather than letting it sit idle. Maybe you're doing it to generate income. Whatever the reason is, it usually starts out with a hot stock tip, because a new trader or investor really doesn't have a lot of knowledge or experience, and they'll take a stock tip from anyone they think may be a reliable source. And when I say a reliable source, what I'm typically referring to is somebody you may think knows more than you do about trading and or investing. And again, maybe it comes from your brother-in-law or your dentist or that self-proclaimed stock guru in the office, or maybe the guy on TV. The TV commentator mentioned the stock, or you read about it in the newspaper, or you like their product or services. Whatever the reason, you choose that one particular stock. Then again, maybe it starts out with, "Hey, have you seen XYZ stock? You don't want to miss out on this one." And since you intended to get into the stock market anyway and to do more with your money, coupled with this hot stock tip, usually after some initial hemming and hawing, you decide, the heck with it. And you're going to go for it. And you're so proud of yourself for stepping up to the plate and taking a swing that you can't wait to report back to your friends, co-workers, family, whatever have you. And maybe you say, "Hey, I got into XYZ stock and it's hot." And perhaps initially you get a little lucky and the investment starts performing well for you. And you start to show some returns. And you feel excited. You start thinking of all the magical things your newfound wealth can do for you. And as many people do who like to talk about their winning investments around the water cooler, like to share their experience with their friends, family, and coworkers. Maybe you brag about it a little. Hey, did you see XYZ stock? I cannot believe it. In my own personal case, I was even talking about the boat I was going to buy with the gains from this particular stock. I'd even gone so far as to invite people to go out water skiing with me when I got the boat. In doing that kind of talking, one takes on a lot of personal and emotional involvement with that stock. Again, not only do you have financial implications, you have emotional implications because you and your ego are tied directly to the performance of that stock. And maybe after all those great gains, the stock starts to drop a little bit. Maybe now you don't have enough to make that special purchase you were planning on, or you're not meeting that long-term goal you'd set for yourself. And so you're kind of, I'll wait and see and sell it when it goes back up. Because you had seen larger amounts of money in your account, and now you're looking at your account balance and it's gone down a bit. And that's a little bit of a different emotion than what you were feeling at first, that euphoria of a winning investment. And by waiting to see if the price would go back up, you've really cost yourself. And now you see the account draw down quite a bit more, and you've given up like half the gains, and you're a little discouraged by that. Because again, it was performing so well, and then, you say, okay, well, it's slowing down a bit, but it's a good company, and they're going to make a comeback. And by playing wait and see, it costs you again. A huge drop in a stock overnight is not all that uncommon. It just takes some bad news, or maybe a missed earnings report, or lowered guidance, or an analyst downgrade. Bad news, or whatever, maybe force the stock to sell off. And by riding through all of that, you've now given all your initial gains back to the market, and you're back to breaking even. And instead of taking your money off the table and reallocating it elsewhere, you decide to, again, wait and see. Uh-oh. It cost you again. And now you're actually in the hole. What happened to this great company? What happened to the price of the stock? It had been performing so well, flying so high, and been so highly recommended. And worst of all, because you talked about it, because you'd shared with others that you're involved with this particular stock, you just know you're going to hear about it. It's hard enough when you don't even talk about your stocks. But having shared all that stuff around the company water cooler, maybe you'll hear something like this. Hey, how's that XYZ stock doing? I heard they got clobbered. Do you still own it? And of course, not wanting to feel dumb or look foolish because you've done something really silly with your money, you decide to say something like, oh, well, they're a good company and they'll be back. Besides, I'm in it for the long term. Investment takes time, right? And by waiting to see if it would go back up, and by again reaffirming you're tied to the stock, you cost yourself yet again, and now you are really in the hole. And you call up the broker because maybe you read an article somewhere about a strategy that's called dollar cost averaging. And what dollar cost averaging is adding more shares to the position at a lower price to lower your overall cost per share. And by doing so, the stock has to run up less to get you back to breaking even. And it's been written about by many financial advisors, and many financial planners. It's a pretty commonly used strategy. However, in the industry, we joke about it. We call it dollar loss averaging instead of dollar cost averaging, because you're essentially throwing money, good money, after a losing investment or bad trade. And although it does have its place, in general, it's not a good idea. And you would have been much better off had you entered the market with a specific initial game plan. And again, in this particular case, you leverage yourself into the stock a little bit more and hope it's going to go back up, and you see it go back up a little bit, and then it just tanks. Now you are really in a world of hurt. You've leveraged yourself even more, and the stock has dropped even further, and you've started to think, wow, this is a real dog. You are cursing the person who gave you the hot stock tip in the first place. You're losing sleep at night, and you finally just say to yourself, that's it. I can't take any more pain. I am out. And you decide to cash out. And, of course, that's when Murphy's Law dictates, as soon as you hit that pain threshold, you decide you just can't take it anymore, and you sell. That's when the stock starts the rally. And the only words that come to your mind that describe how you feel, well, they're not appropriate here right now. You are just so mad at yourself for being so emotionally tied to this investment, and for making all those mistakes, and just playing it absolutely wrong. And then you see the stock rally back up. And now you realize that you could have broken even, but you decided to cash out at the bottom. Oh, look, the stock actually recovers a little bit more. And you just realize, wow, there is a lot more to this game than you first thought. And it's about that point in time. I'm sure that a lot of you have been through this experience yourself and are nodding your heads right now, that you realize that in order to trade and invest successfully, you need to have a game plan. You need knowledge. You need understanding. You need tools. And you need an education. That's what we're all doing here right now.